Hello everybody! Good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. In last week's video, we talked about the Pi Cycle Index, analyzing how this has perfectly predicted every cycle top and bottom of Bitcoin, all the way leading back since 2013. We talked about how we now have another bottom signal coming in after our recent sell-off, after our crash of 69,000. So for today's video, I'm going to be breaking down what I think this means, how the next 6 months of Bitcoin price action are going to be playing out, and then explaining why I believe that this coming cycle is going to be something completely new that's going to catch everybody off guard. This is something you don't want to miss out on. Lots of exciting information, so stay all the way to the end so you don't miss out. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing. Make sure you hit the notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server or download my free educational ebook, links are in the description to go ahead and check out both. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, so here we are today. For today's video, we're going to be talking about the Pi Cycle Index and what it means factoring in with this coming cycle, and really some differences that we're actually seeing with our most recent signal coming in. Now keep in mind guys, I am on a weekly time frame. If we drop it to a daily time frame, you're going to see that that Pi Cycle low has actually came in here. Now, we're going to have to wait to get a bigger signal on the weekly time frames, but just know that we're in the early processes of ultimately getting that confirmed signal. Now, here's where I wanted to talk about some differences that we're seeing between the signal that we just got, why it's different from the prior signals that we've been given, and ultimately what that means going into this next 6 months to even year worth of consolidation. Now, as a rule of thumb, based off of the last two cycles, we've had to go through about a year of bear market, followed by about a year and a half to 2 years of sideways price action, where the markets really aren't doing a whole lot. And most of the time, the markets don't really do a whole lot until after we have our Bitcoin halvings. And so I really appreciate this indicator because it not only factors in the tops and the bottoms of each cycle, but it also gives us the halvings. And so we can come through here. We're going to go through and explain some different thoughts on this indicator than I did for my last week's video. I found some really cool things that I think are going to help you guys a lot in your trading plan. So let's just go ahead and talk about things first right off the bat. Now, here's where the differences kind of come in. With this signal, notice here that this is, mid-June that we got the signal. Our exact low was the 13th of June that we had after our original sell-off, after the all-time highs. And it was during this move where we're getting our low coming in midsummer, right? Now, something that's different, if we come all the way back to basically 2011, we're going to notice that we didn't have enough price data to really give us the indication quite back here. But notice here that the white dotted lines, these are every bottom of the cycle. Now over here, there's a similarity that was playing out in every cycle, and it's now maybe differing, but I'm going to let you guys decide what you think's happening. Now notice here that we got our bottom in 2011, the 14th of November, 2011. This was a winter bottom, and this is actually something that's very common inside the crypto markets. You're going to see bottom of bear markets happening in the winter. So this was November, we get the winter time frame. Let's make this white. And then this, we get our winter time frame. That's our cycle low. Now we come over here and we get our next cycle low that comes in at January 12th. So just about in the same fashion, we get that winter bottom. And now this is where we start getting our Pi cycle indications. We had been getting them throughout the run up, but now it's starting to flash them on the sell-off back down. Now we're getting the bottoms as well. Now, if you come over here to our next cycle low, we can see that this one bottomed the 10th of December. And so once again, every bottom up to this point in the cycles was taking place in the winter, right at the end of the year. We talked about this a lot, especially if you were following my channel back in 2020. Now, this is where things are a little bit different. So assuming that we're going to once again get that confirmation on the weekly time frame for our Pi cycle low, we just have to wait a little bit more, get a weekly close or two. Whenever that comes in, this will be the first time that we'll get that confirmed cycle low that won't be happening in the winter. Now, I've gone ahead and I've drawn a dotted line over here at about the 14th of November, just to show you guys how early we are, or how much time we still have to go until we actually do get to that end of the year threshold. Now, there's a couple different ways of looking at the Bitcoin chart, and we have talked about this. Now, whenever we're analyzing 4-year cycles, you only ever measure the cycle low to the cycle low. You don't measure cycle highs, because even though they can follow a 4-year cycle trend, they still are not as accurate. Tops can actually top premature or top later than a 4-year cycle, whereas the bottoms should always be following a cyclical formation, in this case the 4-year cycle timeframes. Now, what we're going to notice here is where we got true euphoria, what we'd constitute is a blow off top, the thing that I was always talking to you guys about. We didn't see max euphoria until about this time frame over here. It was in the midsummer, right? Should say basically the spring into the summer was when we topped. The summer was when we topped here, and then that's where we pretty much began the bear market. And so this is a little bit of a different sort of cycle than we had been used to. Prior tops, this one came in the winter, this one came in the winter, and this one was topping premature, right? This one got this spring to summer top. This was a period where in prior cycles we had seen pullbacks, but that always led to a blow-off top, right? I mean, this one topped in April, we had a little pullback, that bottomed in July, and then we went for a blow-off top, which is something we were watching for once again in this cycle, because we topped at about April, almost the same time frame. We got that little correction back down. We bottomed in July, almost the exact same time frames as we did in 2013. And then we started going up again, but instead of getting a big blow off top, we pretty much topped right at that previous all-time high. Yes, we technically made a new all-time high to 69,000. But when I look at this chart personally, I don't view this as another impulse. I look at this as a little bit different. I look at this chart as being the cycle top was here. And then this is just a deeper corrective phase. This entire move here is just part of the same correction. I don't look at this as a new impulse. I look at this as a corrective move that just happened to peak above the previous all-time high, which is nothing new. It's nothing that can't happen. It's a perfectly valid correction based off of Elliott wave theory. And that's kind of what I've been updating you guys with in my trading plan. What I've been sharing with you guys is that we've basically only completed a wave 1, a wave 3, and this entire sell-off that we've been is only a wave 4 correction. We're still missing our wave 5 impulse before this entire thing is done. Let me make this white so that you guys can actually see it. This is where we are as far as our big picture Elliott wave cycle. We finished wave 1, wave 2, we finished wave 3, and we're now getting the cycle low confirmation that's about to be confirmed on this weekly time frame. And this is where I believe that our cycle low for wave 4 is going to be taking place. Now, this is an interesting time because, like I've stated, prior cycle lows in every single cycle up to this point have taken place in the winter. This one happened in the winter, this one happened in the winter, this one happened in the winter. For this cycle low to be taking place in, June, that is something that we haven't seen up to this point. That would be a cycle low that's coming in, much earlier than our projected cycle low that was being forecasted in the winter, right? So what does this mean? How does it factor into the next few months of price action? What does it mean long term? And let's get into that part right now. Well, first off, I couldn't tell you what the exact price action consolidation is going to look like over the next little while. But what I can say is that the average point that I think price will generally either find resistance at or kind of consolidate around will be this red line here. Notice how our first cycle, this became support before we began the next major bull run. And then once we start getting our pi cycle lows, we can see that once this red line becomes resistance, once we actually fall below that, that's when we get our pi cycle lows. That was what we saw here. The red line was support. The second that we crash below it, we get our pi cycle low indicator that came in. Same here. During the 2018 bear market, we were holding support at the end of the descending triangle. The second that became resistance, we sold below it. And then that's when we got our next pi cycle low. If you guys notice here, this was pretty much the same thing that we just went through. We got our consolidation right above the red line, and then our most recent sell-off was us capitulating back below that. And so that's why on the daily time frame we have our pi cycle low. We have to wait until we get the indication on the weekly, but it's going to come in right here at this same low once again. And so what does this ultimately mean? Well, I can't tell you specifically, but what I can say is that this will be the first time that we've had this indicator flashing that isn't happening on a winter time frame. And so I think that this is a really important thing to factor into our trading plans, because this is something that's a little bit different. Not only did we get a cycle top, our maximum euphoria across the board, where the majority of altcoins topped, because you guys got to remember, if we're thinking in terms of the emotional psychology of a market cycle, which I'm just going to go ahead and pull this up here. I'm going to pull up two different things so that you guys have something to look at. So we're going to look at the Elliott wave theory, impulse, and then we're also going to be looking at the Wall Street cheat sheet. Now we're going to pull both of these over here, because I think that both of these combined are one of the best indicators that we can go off of when it comes to understanding and studying market cycles. So let's come through here. Let's clean up the chart a little bit, and let's talk about where I think the prices are going to be heading into the future as we get through these next cycles. Now, first things first, guys. Remember, inside of Elliott wave theory rules, you have 3 sets of impulses for every cycle. We finished wave 1 and wave 2. That's what I believe the run to 14K back down to 3,800 was. We finished wave 3 and wave 4. That was the move from 3,800 to 65,000. And then wave 4 was 65,000 all the way back down to the bottom that we just made at 17,500. So where I believe that we still have to go inside of this long-term graph is our wave 5 impulse, which would be the actual top of this Elliott wave cycle. Keep in mind that you can have a bigger picture Elliott wave impulse that's playing out, or a corrective phase, and 4-year cycle timeframes or the pi cycle timeframes, or I should say the pi cycle indicator, can all be flashing at their own given price points. The reason why I believe that this cycle is going to be different is because of the fact we topped early inside of our impulse. As a rule of based off of the last few cycles, we saw a top that took place here at basically the 4-year cycle timeframes. Keep in mind that, like I stated, the 4-year cycle timeframes are always measured from peak low to peak low, because the highs can be different. And I think that this most recent cycle was an exact example of that. Because if we're looking at the prior cycles, if we're measuring from this all-time high to this all-time high, it equals almost exactly 4 years. If we're measuring from this all-time high to this all-time high, it only equals 1,200 days. So that we were quite a bit shorter at the top of our wave 3. Now, many people are going to be asking me, well, technically we made a new all-time high at 69,000. Why aren't you calling that as an impulse? And it's because this move in here looks more corrective than a true Elliott wave impulse. Look at this. This is an impulse. This is an Elliott wave cycle. We can see massive impulses, little corrections, but big impulses all the way through. Even this was a consistent Elliott wave cycle. Consistent growth, impulsing until we get a parabolic top. This is impulsing still, but I believe that it's a different kind of impulse. Where these completed 5 waves up, this one only completed wave 1, 2, 3, 4, and we're missing our wave 5. So I believe that the next cycle is us getting our final wave 5 of this impulse. Now, let's talk about what it means talking about the emotional psychology. I think that this is a super important point in time because of the fact we are bottoming a little bit earlier in this cycle. We also topped a little bit earlier than what we were accustomed to. So our cycle top of wave 3 was a little bit early, and now it would make sense why we would also bottom a little bit early. What does this mean for our next cycle? Well, I personally believe that we're not going to be getting the same length of consolidation that we would normally get in prior cycles. If we come over here and get our date tool, the length of time from this all-time high to the breakout of the all-time high was a little over 600 days. Now, once we start getting into a larger market cap where price syncs up with the 4-year cycle as well as the pi cycle, from the all-time high to the point of breaking the all-time high, this was a little over 1,200 days. If we're looking at our cycle top of 2018 to the point of breakout, this one was about just under, basically 1,100 days. So about 100 days shorter than our cycle in 2013. And so these are some of the differences here. But this was the length of time that we were seeing in the last 2 cycles. It basically took us until we got our Bitcoin halving before the price ever went up. And that was kind of the staple of all of the last cycles. We can see here that we get our bear market, our cycle low comes in here at the winter, we start uptrending. Once we get our Bitcoin halving, that was the moment where the cycles start to go into new all-time highs. Same thing happened in this one. We get our pi cycle high, it also comes in at the winter. We go through 1 year of bear market, we get our pi cycle low right here at the same 4-year cycle time frames at the end of the year. And then we take basically 1,200 days of a large rounded accumulation before prices finally go into another parabolic rally. And so this is where it takes a much longer period of time. There's more money entering inside of the cycles. Eventually we get our next pi cycle top, and then we go through another bear market. This one takes 1,100 days before we break an all-time high. But then once we did get our cycle high, this one topped in April, whereas this one topped in December, this one also topped in December. And this is the only cycle that's been different in that regard. And so I think that because of the fact we had a cycle top that was a little bit earlier, and now we're getting our pi cycle low that's taking place here a little bit earlier as well, ultimately what that means is that we are going to be topping earlier in the next cycle. I think that this is where we ultimately get a difference inside of each cycle. This was a long, rounded accumulation structure before our next cycle high. This was another long, rounded accumulation structure before our cycle high. I don't view this as a true cycle high. I view this as a top of wave 3 and a bottom of wave 4. So because of the fact we're bottoming a little bit earlier, most likely we swing back up to this red line and retest that. We could even come back down and make our first higher high, something like this. But overall, I do expect that we're going to be making our uptrend, and we're going to be doing something along the lines of this. I can't tell you exactly how it would look, but I think that we would actually be getting a cycle top that would be coming closer towards our next halving. Keep in mind that in every cycle up to this point, we have our Bitcoin halving, and then prices go parabolic. We have our Bitcoin halving, and then prices go parabolic. Bitcoin halving, and then prices go parabolic. This is one that I believe that this cycle is going to be a little bit different. I believe that we're already going to be starting our wave 5 here. This big wave 5 that we can see here. That's going to be this next move on the way up. I believe that that's what we're going to be creating is the final impulse of this cycle. And I believe that this next Bitcoin halving, our fourth Bitcoin halving, could actually act more as a sell the news type of event. This has always been Bitcoin halving, maximum euphoria. Bitcoin halving, maximum euphoria. Bitcoin halving, maximum euphoria. And so everybody's going to be looking for that exact same thing to play out once again in the market. And it's very possible that we could just make another one of these lengthy consolidations that plays out over a long period of time that would ultimately wait until this next Bitcoin halving here at about April 30th of 2024. That's when our next projected Bitcoin halving is going to be. It's 4 years from our last one that was May 11th of 2020. So if this is our next projected Bitcoin halving, there's only two things that can happen. Either A, we make a new all-time high and we start running into this next cycle earlier and we end up getting that cycle top somewhere around the next Bitcoin halving. So for the first time ever, the Bitcoin halving doesn't act as a maximum euphoria event. It actually acts as a sell the news type of event. It would be a cycle top type of event, right? So this is something we haven't seen before, and I think it's important that we expect the unexpected moving into these cycles because this cycle did top prematurely. If we're looking at the likes of like Dogecoin and other cryptos like that, I think it's really important here. Let's look at a different chart. If we're looking at the likes of Dogecoin and whatnot, where this thing actually topped was May 3rd, right? Our maximum euphoria took place at May 3rd. That was our true euphoria event. If we're looking at the Wall Street cheat sheet, the moment that everybody is a genius, we're all going to be rich. If we're looking back in the time of what was actually taking place when Bitcoin was at 65,000 versus what was happening when Bitcoin was at 69,000. At 65,000, Elon Musk literally went on Saturday Night Live dressed up as the Doge, talking about Dogecoin on the TV, right? And so there was also SafeMoon that was going off. There was also Shiba Inu that was going off. Then there was all these variances of Shiba Moon coin and Safe Doge Inu and whatever, all of these hybrid meme coins that literally solve nothing besides pump and dump schemes. That is what you see at true euphoria cycle top. Now, what was the difference between what we saw at 65,000 versus 69,000? At 69,000, it was really NFTs that were taking off, but altcoins were actually making lower highs. If we're looking here at what happened for Bitcoin when it topped, all of the other altcoins were making lower highs, right? This was lower highs for altcoins. All of the altcoins, not all of them, but a lot of them that finished their cycle tops, they ended up topping at that May timeframe. So our true euphoria of the cycle, in my opinion, was taking place here at 65,000, which our true cycle top of maximum euphoria was April the 12th. And so this was the first time in where we saw this pi cycle high. We get the cycle top of our cycle, but it happened a lot earlier than the prior cycles, or at least what we had been used to. And so now fast forward to where we're at today, if now that we're getting our pi cycle low that's taking place here, this is the first time this pi cycle low is flashing that we're not at the winter, right? Notice here that we get our pi cycle low in 2015, and then we go through basically a year of ranging. This was our accumulation range before we began that new cycle. Keep in mind here that we look at this one in 2018. We get our pi cycle low that flashes in here, and we still went through 100 days of accumulation before we broke out. And so this one to be flashing here, it's flashing, but we're way short of our 4-year cycle and end of the year winter time frame that is when we're supposed to be getting our next low, right? And so if this is the case, what I believe is actually going to be taking place is this is where we begin our true cycle top, our true run up into wave 5. Now, I'm not saying that this is going to be the cycle top of the entire price history of Bitcoin. I just believe that it's going to be a much bigger cycle top where we could actually follow a multi-year bear market. In prior bear markets, we only get about a year worth of a downward sell-off. This one was a year here. This one was a year. And if we're measuring from the top of 65,000, we're over a year at this point. If you're measuring from the top of 69,000, then this white line is when our projected cycle low is going to be. I think that maximum euphoria is going to be taking place, and we're actually going to be front-running this a little bit earlier. Whereas every other time, we get our pi cycle low, and then we go sideways for a year, or at least a few months. I think that this will actually bounce up. We'll come back up to this red line that will probably be taking us around $30,000. And then we'll probably end up coming back down. We'll pull back from there, end up going a little sideways, similar to what we saw here. It'll just probably be a little more volatile. A little smaller version of that. And then we'll kind of range here. And then when we do actually get to the end of the year and our projected cycle low, I think that that's actually where we're just going to be leaving the accumulation range. Whereas we always began the accumulation range once the pi cycle low came in here, I think it's going to be a little bit premature. I think that we're going to end up accumulating earlier than prior cycles. And this is ultimately going to be leading us into an earlier cycle top that's going to be taking place around our next Bitcoin halving. I believe that this is what the charts are telling us, and I think that this is ultimately why we're seeing this cycle low coming in here earlier than where our projected 4-year cycle bottom is supposed to be. And so this is why I think that the cycles are going to be a little bit different from here on out. They started to be a little bit different once institutions got involved. Once the institutions really started to get involved with the market, Bitcoin became way more volatile. We started to see differences inside the cycle. This is when we saw that huge move to 14K, followed by a 72% correction back down to $3,800. That was something that we just didn't see in prior bull trends. And not only did we see that, but on the way up, we topped earlier than we were expected, and now we're seeing another massive sell-off and a retest of a previous all-time high for the first time. There's so many differences that have happened this cycle than our last ones, and I think that that is something that can only be more consistent, or at least what I think will only be more consistent as our cycles play out from here. I think that with the next big thing is just expect the unexpected. Everybody's going to be watching for this next Bitcoin halving. I think everybody's going to be watching for this multi-year kind of accumulation to play out like we've seen in the last 2 cycles. But I just don't think that that's going to be playing out because this is where we're at, and it's different than where we're at in prior cycles. And so anyways, guys, this is just a thought that I've been having. I wanted to share with you guys a pretty detailed understanding inside the charts of what I'm talking about. I don't know exactly how the price action will look, but because we're starting to get these bottom signals that are happening at an earlier rate than what we've seen in prior cycles, I still believe that that's going to lead to an earlier cycle top in the next one. Ultimately, all we can look at is for the price action, and if we start getting a lengthier consolidation like we've seen in the last two cycles, then obviously we're most likely going to follow in that same direction. But because this cycle has been so different so far, I actually believe that it's going to be affecting the next cycle as well. And so because of that, I'm looking to take profits a little bit earlier than what I would normally do inside of a 4-year cycle. And that's partially because of the fact we topped earlier in this most recent cycle. And I believe that that will be leading us into an earlier cycle top in the next one. With that being said, guys, thank you guys so much for the support. If you found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server or download my free ebook, links are in the description for that. Thank you guys so much. You guys can also check out my VIP subscription. If you guys want to follow all my trades, all my analysis, all of that's going to be posted inside of my Discord server for you guys to follow along with for a lifetime access. Thank you guys so much for tuning in. And with that being said, I will catch you in the next one. As always, peace out.